Hello.
Step in, lean in, mic on, and begin. Hey! Been quiet too long, chewed up tongue, turned down songs, clock keeps ticking on the wall. But your name's still missing from the roll call. Let your voice be heard, say every single word, from the low notes to the sky. Throw your hands up high. Let your voice be heard, loud, clear, undeterred. Got a light, buddy?
Yeah, sure, kid. There you go.
And your wallet.
Nick, give him your wallet.
If it shakes the room, that's how you know it's you, yeah. Oh, yeah. You got a truth tucked deep in your chest, heartbeat tapping out, say it, confess. Crowd might stare, let them do what they do. They never held a fire living in you. Let your voice be heard, say every single word, from the low notes to the sky. Throw your hands up high. Let your voice be heard, loud, clear, undeterred. If it shakes the room, that's how you know it's you, yeah. Speak up, name your dream out loud. Stand up, you're the leader of this crowd. One spark, one shout, watch the silence melt. Power in your mouth is the truest thing you felt. Let your voice be heard, say every single word, from the low notes to the sky. Throw your hands up high. Let your voice be heard, loud, clear, undeterred. If it shakes the room, that's how you know it's you.
Welcome once again. This is Cloyd Holmes. This is Let Your Voice Be Heard Talk Radio. I am the host. Tonight we have a very, very interesting, very, very encouraging, something that I need to know about, something that you need to know about. We have an awesome guest. We are blessed to have Mr. Neil Fishman here with us tonight. It's a new guest on Let Your Voice Be Heard Talk Radio. Yeah, you guys get your pens and paper out, man, because as you can see, I already got a bunch of notes on you, Neil. We talked a little bit, and I want to introduce everybody. This Neil Fishman. He is Neil. Let me tell you a little bit about Neil. Neil, born in the Bronx, New York. Neil's a New Yorker, as I am, and a couple of guests on here, a couple of panel people from New York on here. Neil was born in the Bronx, but raised in Oceanside, correct? That's right.
Oceanside,
correct.
Yes.
Oceanside. That's Nassau County, right?
Yes, it is.
Nassau County, yeah. I'm from Suffolk. Neil went to the University of New York. It's at Oneonta, right?
Oneonta.
Yeah. Certified accountant. I'm not even going to tell you a whole story, Neil. I'm just going to tell a little bit about you, and I'm going to let you have the floor, because you told me your father was a CPA, correct?
Yes.
He had a company, had his business in 1989.
That's when I started working for him.
That's when you started working, okay? And then you did something else. You took over his practice in 2001. Now, I'm going to just leave it right there. There's so much that you offer, that you have to offer, that this panel is going to be shocked to hear about, because I was taking down a lot of notes. There's a lot of questions that I'm going to have, and I know a lot of people here are going to have questions. So now I'm going to introduce you guys. This is Mr. Neil Fishman. as you can see on the screen here, he's a CPA, CFE, FCPA, CAM. Whew. Tell us all about it, Neil.
Well, as my father used to say, I have a cornucopia after my name.
Oh,
Cornucopia of letters. So CPA, as everyone knows, that stands for, well, it can stand for cleanings, pressings, alterations, car parking attendant, can't pass arithmetic, can't play the accordion, can't put away the alcohol, or constant pain in the anatomy. And as most people get to know me, they realize which one is most appropriate. It's the last one. CFE, that is a certified fraud examiner. FCPA, that's forensic certified public accountants. And then CAMS is certified anti-money laundering specialist.
wow.
Yeah. Say all of that 3 times fast.
You can't do it.
Yeah. No, first of all, I want to thank Cloyd and Tony for giving me this opportunity.
It's our pleasure.
And I want to, everyone who, all these names I do not know, but I hope to eventually get to know you. Hope you have the opportunity to get to know me.
Yes.
So yes, my
After
primary
2 times, your family.
I'm sorry?
After the second time on here, the 2 times on this show, you become your family then. Then yeah. So, you'll know everybody.
Well, when people go to college, one of 2 things happen. One is when they go, they know what they're going to do, and they follow that path all the way through college and beyond. Other people will go there. Either they have an idea or they have no idea. They kind of figure out what they're doing, and then eventually they fall into what they end up doing. When I went to college at Oneonta, New York, I was originally pre-law. I was going to major in history, minor in accounting. My father, like I said, was a CPA, and he said, "You want to be an attorney, fine, but also get your CPA, get your JD and your CPA, and you can spend part of the year working on taxes and the rest of the year doing whatever aspect of the law that you want to pursue." Well, long story short, I ended up with a bachelor's degree in theater. And I spent several years pursuing that. And as you were showing in the beginning, clips of Tony,
Yes.
He did a little bit more than I did. I did a lot of film background work, being in film extra. As I tell people, if you want to see me, you have to know when not to blink. My biggest claim to fame was the daytime drama Another World in August of '85. I appeared as what's called a U5, that's under 5 lines of dialogue. That was my biggest thing. And in '89, I was contemplating going back to school, though the intent originally was to go for a master's in theater. Part of my theatrical background is stage combat. So that's like if you've ever been to a Renaissance fair or medieval times or watched an Errol Flynn movie or even a Rocky movie, all of that is stage combat. But that's when my father approached me about coming to work for him. And he said, if you don't, just give me 6 months, so if you don't like it, after that you can go, no questions asked. So I did that for 6 months, so I agreed. And for those first 6 months, I was living in Manhattan. The office was in Rockville Center, which is Nassau County, South Shore. So for those first 6 months, I did the reverse commute. And when the time came to stay or go, I stayed. And I gave up my apartment in Manhattan, started going back to school for accounting so that I could eventually sit for the CPA exam. That took 4 years of going to school year round.
Wow.
2 summer sessions, 2 courses in the fall, 1 course in the spring. That took 4 years. Now I was eligible for the CPA exam, and there, at the time, the exam was being given twice a year, May and November. And so it took me a total of 6 times to pass all the parts. So in November 97, no, strike that. In August of 97, I got the word that I passed the last part. And believe me, when I got the letter and I read it saying congratulations on having passed the CPA exam, I didn't whoop for joy. I didn't scream. I just thought, oh, thank God I never have to do this again. CPA exam, most people don't know this, but the CPA exam, it's a national exam. Licensing is by state, but it is the second hardest exam given nationwide. So I got so in October of 97, I got my New York license. Was it 203 or 204? I got my Florida license, so I'm dual. I have two CPA credentials, New York and Florida. And then the other credentials were things that I added after getting the New York CPA. My father suggested learning about forensics. And so that's where the certified fraud examiner and the FCPA come in. And then I learned about the anti-money laundering. So all of them, those three are more intertwined, but the CPA is the backbone for everything.
Yeah. Okay. Well, tell us. Tell me a little bit about. When we talk, you and I have had some conversation, and you specialize in tax returns.
Yes.
That's going to get everybody's attention.
Well, yes, my father was a tax-oriented. It's a tax-oriented practice. So for business clients, we do as much or as little as they want us to do. So, for example, if they say to me, "Teach me how to keep books and records," I will do that, and then I just get the information at the end of the year. In other cases, they will say, "I will give you my papers monthly or quarterly, and you do all the write-up work." So it can be anywhere from those two. It can be anywhere in between those two extremes. And then, of course, that culminates in preparing a business return, whether it is the 1120 for a corporation, the 1120S for a sub-S corporation, the 1065 for a partnership.
Well, you and I talked yesterday for a little bit, and we talked about something that you were explaining something to me about doing tax returns or someone doing my tax return and not signing it.
Okay. So, most people don't realize that your income tax return is your most important financial document. And it has to be done every year because that's how the government knows how much tax liability you should be paying in. Now, every now and then, somebody new comes to me. Now, I always tell a new client, a prospective client, to bring last year's return and documents. We're talking, and right now I'm talking a personal return. So, let's see. So, if Karen, hi Karen. Okay. So if she were to call me and say, "I need a CPA to prepare my return," brand new client, I tell her, don't only bring your information for this year, bring last year's return and the documents that were used to prepare it, because that is my initial guide in preparing her or anybody's or even your return, Cloyd. Because I want to see what documents you had last year. I compare those with this year's to make sure that we're not missing anything. Because you have to understand that you get a W-2. Well, a copy of that W-2 gets sent to Social Security Administration, and after they process that, it's available to the IRS. Every 1099 that you get from a bank for interest, from a company for dividends, if you have a brokerage account, you get a consolidated 1099 with interest, with dividends, with all your stock transactions. Well, anything that you sold in the calendar year. All that information is also sent to the IRS. And even though your return is submitted and accepted, at some point down the road, they're matching up everything that was reported by you with everything that was reported by third parties for you. And if they see a discrepancy, they will send a letter. Now, and saying like, we have a discrepancy, we are proposing changes. The changes are always in the favor of the government. The good thing about that letter is they give you the details. They tell you, here's all the interest by company, by bank that they received, how much was reported by them, how much was reported by you. So you have the opportunity to respond, to say, I accept your changes, I dispute your changes, but of course you have to provide the proof that you already reported the information. You know, in America, general jurisprudence is innocent till proved guilty. With the Internal Revenue Service, it's more the Uniform Code of Military Justice, where you're guilty and you have to prove yourself, you have to prove your innocence. Now, this is the case at the initial stages. If you're going through the whole process, and I've never done that, but there does come a point where the burden of proof shifts from the taxpayer to the government. But that's a number of stages down the road. In the beginning, you have to prove that you reported this information, or you did, or accept the fact that you did not. I mean, I've had a couple of clients. I had one client a few years ago who got such a letter. He had just retired. He took pension money. He forgot to give me the 1099-Rs, which showed the income that he got from his various pension plans. So we had to concede. In another case, the IRS sent the information. We responded. We accept items 1, 2, and 3, but items 4, 5, and 6, we said we already reported it. We provided proof, and the IRS accepted our response. Now, when anybody talks about dealing with the IRS, you have to remember, you have to realize that it is not a blanket policy. Each case stands on its own merits. I'm sure that everybody here has seen ads on TV or on radio about these people, about these companies who can settle tens of thousands of dollars owed to the IRS for pennies on the dollar. Well, yes, they play that up, but they have more failures than they do successes. You have to, again, you have to prove that your position is correct. And as I tell a prospective client, I will not sign off on a return. I will not call Karen. I will not call Cloyd and say, I have your return done, unless I am satisfied to it.
Right. Well, we talked yesterday. I'm trying to get to this. You told me something about if the guy who did my returns last year.
Oh, so
didn't
yes.
sign off
right.
on it.
Okay, yeah. So I said, I'm sorry. So every now and then somebody comes in and I look at the tax return, and at the bottom of page 2 on the personal income tax return, the 1040, there's an area known as the signature block. So in the days before e-filing, I prepare your return. I sign as the preparer. I would then give it to you. You would then sign it and take it to the post office. Well, now, because of e-filing and the requirements that preparers have to e-file, if they do so many returns, I prepare the return, I give it to you, I give you an authorization form, which you then sign and give back to me. Now, in the signature block where the taxpayer signs, it says, and I'm going to use the first 4 words are under penalties of perjury. The rest I'm going to paraphrase. I have reviewed this return and the supporting documents and schedules. To the best of my knowledge, they are true, accurate, and correct. And if I'm using a paid preparer, they're relying on information that I, the taxpayer, have given them, the preparer. Okay. Now, but every now and then I have to ask. So I say, Cloyd, did you prepare your return yourself last year? Your answer is going to be no. Why are you asking that? So I point out in the signature block where the paid preparer would sign, it's either blank or it says self-prepared. Happens every now and then. Why are they not signing off on their work? Well, a couple of reasons are, one is they're getting cash and they don't want to report the income. They don't. Or they just, for whatever reason, they don't do it. Now, here's the thing. If you get a letter from the IRS questioning your return, and the return indicates that you did not use a paid preparer, that means you did it yourself, and you will be held to the same standards as a preparer. So you'd better have the answers for everything. I saw we had a couple of questions.
Yeah. I was getting to that for you.
Yeah.
I was just reading that. Says Sasha Hall says, "What are the biggest red flags for audit?"
For an audit, well, first I'll give a little bit of good news, is that audits are down significantly right now. Claude, are you familiar with the term whipping boy?
No. I mean,
Okay.
I've heard it, but I don't know what it
Well,
means.
basically, if you ever, for example, if you ever read The Prince and the Pauper, Mark Twain, okay, the prince meets this boy, a pauper, who they look identical. They would be twins, and they swap clothing, and so now they're living. And in this, the whipping boy is brought to the prince, to the pauper, basically because when the prince is being given his lessons, if he misbehaves, well, the teacher can't hit the prince. So they have this other boy who gets the punishment, who gets lashed.
Okay.
That's a whipping boy. The IRS is the whipping boy, and for good or bad, the power of the purse lies with Congress. So a few years ago, when Congress passed the Inflation Reduction Act, it was going to give $80 billion to the IRS over 10 years. More than half of that money was going to go towards enforcement and specifically hiring people. Now, when this whole thing came out, they were talking, they're going to hire 50,000 auditors. No, they're not. There aren't 50,000 people who could be hired as auditors, because it's not just the auditors, it's also all the support staff. And then, of course, under the current administration, Congress has clawed back a good chunk of that money. So audits are down. Not that they don't happen, but not as many. But what's a red flag as an audit? Well, I know from past experience with the IRS that in years they will, regarding personal returns, they may look at returns that have something specific, like a Schedule C, or they will have a Schedule A with a lot of medical deductions. Those are a couple of examples where they will look to see, and they might send you a letter asking for additional information. Like for the Schedule A for the medical, and this happened to a client about 15 years ago, they had to provide documentation for the medical expenses. So I told the client what they had to do. I offered to help. They said, no, we'll handle it. So they did it. They sent it in. They got a letter from the IRS, you owe $3,000. They come back to me. They ask me to help out. So I call the IRS. I asked them if I can resubmit the information. They said yes. So I did. I reorganized the information, submitted it. They owed $300.
Wow.
I said pay it and be done. There are some things you get to a point where you don't fight it anymore.
That's right.
So what can raise a flag? Well, one thing that could be is what's called an economic reality check. So, for example, somebody lives in, let's say, an area that really requires a lot of income to be able to live there. So let's say here in Florida, you're talking, say, Boca Raton, or certain parts of Boca. In New York, we could be talking like Westchester County, Scarsdale. There are places where the income, because of the property taxes and the cost of living, it can be it can be rather expensive to live there. But now a person only shows, say, $40,000 or $50,000 of income. That could raise a flag.
No.
In a business, Again, hard to say. It's what the IRS is looking at, but they could be looking at certain expenses that you might have. Again, don't know what they will be, but depending on what the expenses are that they're looking at, they could say, hey, this seems like a very high number, and then they question it. It's very hard to say what triggers an audit every year. I can say this, it is, or it has been standard procedure that if you do get audited this year, in 1 year, there's a very good chance within 5 years you might get audited again. Because the IRS will want to see if you're being in compliance. And I did have a client who got audited twice within 4 years.
Oh, wow. Thank you for that, Neil. I see you, Lazaro, but I'm gonna get this question. Yolanda asked this question a minute ago. It says these days there are so many scams and taxpayers can be targeted in various ways. How do you avoid being a victim?
Well, okay, so first of all, if somebody advertises that they can get you a refund, that they guarantee you a refund, do not use them. They're most likely going to be doing something that's not kosher on your return. Okay? Like you said, I have a number of credentials after my name. I think that now, I'm not saying that credentialed is good, non-credentialed is bad, because there are some people who are very good doing tax work, but they're not credentialed. They just can't pass a test to save their lives. But you look for someone, first of all, you want to make sure they're reputable. For example, if they are credentialed, there's oversight. As a CPA, if I commit egregious errors, you can file a complaint. So if it's a CPA, whoever oversees CPAs in New York State, it is the Department of Education. In Florida, it is the Board of Accountancy. If the person is an attorney, well, the state bar, wherever they are. And then the other credential I want to mention is EA, that is an enrolled agent. That's a credential you get through the Internal Revenue Service. You have to pass a couple of tests to get that. But again, if you have a credential, somebody can file a complaint and they will look into that. That person, the preparer, will in all likelihood be contacted by the oversight, whoever's doing the oversight, and they will have to respond. So if anyone guarantees a refund, don't do that. If it's one of these local offices where it just opens up, I don't know. I mean, the tax preparation offices, I see Karen has her hand up.
Yeah, Lazaro.
I see the tax preparation offices, they serve a function, they serve a segment of the community, of the tax-paying community. So I cannot disparage them. But a lot of the times there might be just a CPA, and the people doing the work, a lot of them are not credentialed, but there is at least one CPA overseeing everything.
Thank you for that. Thank you so much. Lazaro, I see you had your hand up for a while here.
Hey, Neil.
Hi, Lazaro.
Hey, how's it going? Thank you so much for stopping by.
Oh, thank you.
So, I know you have a lot of experience when it comes to auditing and these IRS and like fraud and things like this. I wanted to ask you, from your experience, right? Like, how do you think fraud has evolved? Like the perpetrators of fraud, how have their MOs, right? Like, how have their modems of operation, how have those evolved over time, right? And my second question for you when it comes to that would be, do you think it's easier or harder for people to just perpetrate fraud today?
Well, first of all, let me start by saying is that it is said that if somebody is that determined to get you, they find a way to do it. Now, fraud, when we're talking fraud, okay, there are a whole varieties of fraud. There could be in a corporate, let's talk a corporation, there could be payroll fraud. There could be what's known, which is where you have phantom employees, someone's getting another paycheck. In a company, you have to have a lot of differentiation of responsibilities. In a small company, that's not always the case, where people might be doing if it was a larger company, those responsibilities would be separated. You'd have to look. Lazar, did you ever see the movie Catch Me If You Can? Lazaro?
Yes, actually, with Leonardo DiCaprio and Tom
That's
Hanks,
the one.
correct?
Yes, that's actually a true story. Frank Abagnale. If you watch that movie, that's how he did all his cons. The thing is, checks are still a big thing. But now, a lot of more people are using credit cards. And also, it used to be that people, you get all that junk mail. You get all these offers for credit cards. This is in years past. And they would just throw them out, and people would go dumpster diving. They'd find these envelopes that haven't been opened with credit card applications. They would fill them out. They would get the credit card. They'd spend it up to the max. But of course, it's not in their name, it's in the other person's name, but they changed the address for where the credit card bills go to, and then all of a sudden, you get something from a credit card company that you owe all this money, but you never had it. That was the old way. Now you have tax refund fraud. That's the latest thing. I'm here in Florida, South Florida. I'm in Palm Beach County. Palm Beach County, Washington, D.C., South Florida, and Atlanta and Georgia are considered the three capitals for identity theft. So how easy is it to commit identity theft? Well, it's not that difficult. So let's say I know somebody who's working in a doctor's office. I'm just gonna, okay, hi, I see there's someone here. I'm gonna pick Michelle Rolka. She works as hi Michelle. Gonna pick on you for a minute.
Hello.
Okay, so Michelle works in a doctor's office. And I know her personally, and I say, Michelle, how would you like to get $3,000 cash? And she's going to say, what do I have to do? And I tell her, just give me the following information on 100 patients: name, address, social security number, date of birth. I can now use that information. I can prepare a tax return for those people. And if I get it in first, before the person actually sends in theirs, their return is going to get rejected because a return was already received by the IRS. Now, several years ago, I had 9 clients whose tax returns got rejected because they were victims of identity theft.
Wow.
I looked for some common factor, some common thread. And I actually found one. On 8 of those returns, the fraudulent return, because at the time I could get the transcripts from the IRS of the fraudulent returns. All those 8 fraudulent returns only had one source of income. Now the income source varied. It could be Social Security, it could be interest, it could be dividends, it could be a retirement payment from a 1099, whatever. Only one source of income, and then, of course, asking for the refund. The fraudsters with tax returns tend to keep the tax returns as simple as possible because, again, it takes a while for the IRS to match up the information received with the information on the return. They are required, basically, to issue their refund once the return has been received, normally within, I believe it's 21 days, 15 business days.
Thank you so much, man. It's told you guys gonna be some very what's the word I'm looking for? Expensive information, so to speak. Karen, I saw you had your hand up.
Hey, Neil.
Hi, Karen.
How are you?
Hanging in there. How are you?
Okay. I'm a New Yorker.
We're in New York.
I grew up in Long Island from
Where?
Amityville,
Okay.
and then I had my daughters in the Bronx, the Co-op City, Dyer Avenue area. Then we lived in New Rochelle and Westchester.
Okay.
Now I'm in Palm Beach. So
Oh, you're up the road from me. I'm in
Yep,
Boynton.
I'm in Wellington. So I gotta say, I've seen it all. I'm a New Yorker. I've seen it all. Now, back in the day, you're young. I wasn't making a lot of money. I had kids. So I wasn't going to go, let's be real, I wasn't going to a CPA. I was whoever, Joe Blow over there, he does great with taxes. He could get you money. That was the name of the game back in the day. No one was thinking about this is the right way or the wrong way. It was, how could I get that check? Period.
Yep.
Now, I might need to come see you. So I need to. I might need to come see
Yeah,
you.
no, everybody, look, as a colleague of mine said many years ago, if all you have is a W-2 and a little bit of interest, you can probably do your tax return yourself.
Mm-hmm.
Once you get past that, like if you're now doing investing, and you're getting dividends, and you're buying and selling positions, you're buying and selling GE, IBM, Ford, whatever, amalgamated metals, or whatever it is, you're buying and selling stock, it becomes a little more complicated.
Yeah. It's
So-
different now because think about it. When I was in New York, I didn't own anything. Now you have, and as you get older and you own real estate, you have pensions, it's a totally different ball game. So it's not like I could go to Joe Blow. It's not as though you could go to, the young lady had said about, how do you know, like who's legitimate, who's not legitimate? People are saying, I can get you this amount of money back. And when I was working years ago, it was, Joe Blow can make sure you get this big return. Probably wasn't the right thing when it worked back then. But now I need to make sure, I'm in a different bracket now. And so I probably would need a CPA. So my question, honestly, is when is it important to use a CPA versus what is it? Who is it? The Jackson Hewitt? Or I don't know the people.
Well, the primary ones are H&R Block, Jackson
Right.
Hewitt, and Liberty. There
Right.
are others,
So-
but those are the big three.
So when, I have student loans, I own property, I own, different tax bracket. When would a person, like what would I tell my daughters? You make sure you don't use that and you don't do it online by yourself. When is the time not to do that? And when is the time to actually use you, Neil?
Well, to you or somebody like me, basically the time to do that is, like I said, as my colleague said, W-2, interest, fine. Once you get past that, you need somebody who knows. Anybody can buy the tax software, the do-it-yourself software, and they can do returns. But how do you know that they're entering the information correctly? It's like years ago, one of them used to advertise, one of these do-it-yourself companies would advertise, you can do your return, and then we have people who will review your return after you've done. The $64 question there is, how can they tell you if you entered everything correctly if they are not seeing the original source documents? I mean, I think that once somebody gets started with doing more than just having a job, a salary, and a bank account where they're getting interest, once you get beyond that, you need to explore using a qualified professional. Now, when you mention that, it's like, the person in the local neighborhood, they can handle the very basic returns. Again, I'm not saying this as a criticism of both them or the people living in the neighborhood. But no, but once you get past that, you talk about these people. Let's talk athletes. Let's talk, and I'm going to specify on basketball and football because the majority of those players are majority, again, not criticizing, minority. They come from backgrounds where they really didn't have much of anything. Now they're a first round pick. They're going to have more money than they could have possibly dreamed of. With all due respect to Joe Blow down the block, who does all the local tax returns, this is probably even beyond his range. I agree. We are taught. No, one thing I was taught is if you don't think you can do the job, don't do the job. And
Right.
there comes a point where, and that's something you have to realize you can't do this on the preparer, that this is more than what you're used to doing. Again, I say that I do not say this to criticize. I just say this to people to be aware that if it's something very simple, do it yourself, the local guy. But once you get past that, you need somebody who knows more. You need, like example, we're talking dividends. Well, there's something called qualified dividends, which is part of, and you have to know that. How do you treat the capital transactions? If you have 20 or 30, where you sold 20 or 30 stock positions, you have to make sure that those are reported correctly. How do you know short-term versus long-term? And remember how the taxing is different. Remember, just because it's entered doesn't mean it's right. So, for example, if I'm preparing somebody's return and I'm entering the information that they've provided me, once I've got it all entered, I take that return, that document, the folder, I set it aside. I come back the next day or whenever, and now I'm reviewing to make sure I entered everything correctly. Because, well, as I jokingly say, there is this ugly rumor that I'm human. And, unfortunately, one of the natures of being human is we can make mistakes. And the most important thing about making mistakes is admitting that you made a mistake and doing what you have to do to correct. So when a client gets a notice that that the government is saying that there was a mistake on the return, and I review it, if it's something that if I have to take the time to rectify it, and this was my fault because I made a mistake, whatever that time is, I eat that. I do not charge the client for that additional time. If, however, the client didn't give me information, that's another story. Then I have to, you didn't give me this information to begin with. I'm now correcting this error, like a client got a notice on their 24 return. So now I said, where are these documents? Because the government gave the list. So they got them to me, and then I said, I don't have this stuff for 25 either. So now I have to review what the government's saying for 24, and now I'm going to have to amend their 25 return as well. Again, this was their error, not mine.
Wow.
Okay.
That answer your question, Karen?
I just need the address to the office.
Veronica, go ahead. I see your hand is up.
I have to say how many times I've done my own taxes when I was younger. I thought like it was, it was easier and like you would get them back quicker. But I just want to know, is there like an amount that you have to make to report if you're getting funded like through PayPal or Cash App or Venmo, or if it's like a side job?
27 cents. Technically you are supposed to report all your income, regardless of where it comes from or how. So if you have if you're, okay, I used to see these ads for Poshmark, where the people are selling like their used clothing online. And I love this one ad where the woman goes, I sold so much on Poshmark, I was able to take my family on 2 vacations.
Yeah.
And my wife will tell you, I was shouting at the TV, hey, lady, if you hadn't spent all that money to begin with, you probably could have gone on 4 vacations. No, but you're supposed to report everything. Now, there are thresholds. There's a thing called, okay, if you're employed, you get a W-2.
Yeah.
If you are an independent contractor,
1099.
you get a 1099. There's a 1099 MISC miscellaneous. There is also now the 1099 NEC, which is non-employee compensation. Those are for independent contractors, or like the miscellaneous can be for rents and royalties, among other things. So if you get that, now the threshold right now, last year was $600. I believe it's been up this year to $2,000, where they're required to issue the 1099. But whether you get the 1099 or not, you're supposed to report your income.
Can we carpool?
Now, with PayPal and those places, there is also now a form called a 1099-K. And that is for payments you receive through third parties, basically credit cards. You know, most people, if they're buying things through PayPal, whatever, they're putting it on a credit card. So that information comes out and it's going to get reported. So really, you should be reporting everything. Did that answer your question, Veronica?
Everybody's shaking their head. Everybody's shaking their head. Oh boy.
Look,
Yeah, it does. I just started to ride with Karen. So when you're going, let me know.
My job is to keep you out of trouble with taxing authorities.
Okay.
And I can only do that with full disclosure.
Right.
Listen, I told you guys this was going to
And
be awesome.
and if you have a side gig, if you have your own side business, you know, we have to talk about what expenses you have there that you may not realize you can take.
Oh, that's another question I have. When you're doing write-offs, is there like a limit to writing things off that it becomes like fraud? Is there like an overdoing it?
There can be. You know what?
I think I really have to go.
So let's say you have a side business, and you are, I don't know, or side business, and you're selling knickknacks, and or you have a side business where you're making like little jewelry. Okay, well, in addition to the normal supplies and expenses, are you using your phone for business, like a cell phone? Are you using your computer on the internet for business? We can take percentages of that. There is also a thing called a home office deduction. Now, the kicker is, with a home office deduction, is that you have to have a separate room in your residence, 4 walls and a door, that you're using exclusively for that, and then we can take the prorated portion of your household expenses. So let's say, for example, you're in a 1,500 square foot apartment, and you have one room that's 10 by 10, that's 100 square feet, that you use exclusively for your business. So that's roughly 6.7% of the space of your apartment. So you could take 6.7% of your rent, of your renter's insurance, of your utilities. You can take that as additional expenses against your side gig income. Most people don't realize that. You can also, if you're using your car because you're delivering things, well, you keep track of your mileage on your car that you use totally and also for business, and we can take some of your car expenses. Or they have a thing called cents per mile that can be used.
Like Lyft and Uber too, right?
If you're doing that, if you're doing Lyft or Uber, yes, because Lyft and Uber will give you information as to how many miles you put on,
Right.
and they will also
Are there
give
any
you-
new write-offs this year that I should know about?
From this year, no, not really. Tax laws depend. Last year they passed as I call it, the one big, they call it passes what's called the one big beautiful,
Yeah.
whatever you want to call it.
Yeah.
Okay, I don't call it the one big beautiful bill. I call it the one big beautiful BS. To be honest, what that did was
Several names for that one.
Yeah, what that did was it took a number of the changes from the Tax Cuts and Jobs Act, made those permanent. Well, quote unquote permanent until another Congress passes new tax legislation, whenever that might be, whether it's 2 years, whether it's next year or 3 years from now. It can change. They did add for people over 65, that Tony?
Yeah.
If people over 65, they get this additional up to $6,000 standard deduction on top of their standard or itemized deduction. There are credits if you get tips. There are portions of tips that are not taxable. There's also overtime